In this video, we're going to look at Bank of America, ticker symbol BAC, the pros and cons to the stock, what it would be worth if you invested 10 years ago, hypothetically what it could be worth 10 years from now, also which financial institutions are buying and selling the stock, plus a look at the forecasted price targets from Analyst. My name is Alex, and this is my dividend income channel. So let's start with the pros and cons. Number 1, strong brand recognition. Bank of America is one of the largest and most well-known banks in the United States, which gives it a competitive advantage in attracting customers and investors. Number 2, diverse business. Bank of America operates in multiple financial segments, including consumer banking, wealth management, and investment banking, which helps to diversify its revenue streams and mitigate risks. Number 3, growing revenues. Bank of America has reported strong growth in revenue in recent years, driven in part by its focus on digital banking and cost-cutting measures. Number 4, attractive valuation. Bank of America's stock is currently trading at a relatively low valuation compared to its peers, which may present an opportunity for investors looking for a bargain. The cons. Number 1, economic risks. Bank of America's business is highly dependent on the overall health of the economy. A downturn and recession could lead to decreased demand for its services and increased defaults on loans. Number 2, regulatory risks. As a large financial institution, Bank of America is subject to extensive regulatory oversight, which can result in fines and other penalties for non-compliance. Number 3, low interest rates. In a low interest rate environment, banks like Bank of America may struggle to generate profits from lending activities. Number 4, competition. Bank of America faces stiff competition from other large banks and fintech companies, which could limit its growth potential and market share. Let's have a look at recent earnings. In Q1 earnings, Bank of America beat estimates. Revenues of $26.3 billion, beat Wall Street's estimate of $25.32 billion. They also beat adjusted EPS. The increased profits was largely down to increase in interest payments. Deposits have been down, but given the current banking crisis, that is not surprising, as it adds uncertainty over the financial sector. If we look at an article on the Motley Fool, shares have been getting cheaper. The stock's decline since the start of 2022 has reduced Bank of America's price to tangible book value to about 1.2, which is well below the 10-year average of 1.4. You could argue that the higher rate environment compared to most of the past decade makes the stock more attractive because of the tailwinds to its earnings. Now let's have a look at how the stock has performed in the last few years. If you invested $10,000 in Bank of America stock 10 years ago, what would it be worth today? If you'd invested $10,000 in 10 years ago, specifically on May 3rd, 2013, this would have bought approximately 966 shares at the closing price of just over $10.34. Then as of May 5th, 2023, the value of the investment would have been approximately $26,816.16, based at the closing price of $27.76. That is slightly over a 168% increase. This is assuming you have not reinvested the dividends, as this would be much higher. From those 966 shares, you would be receiving $212.52 quarterly, and that is $850.08 annually. Please note that this is an estimate based on historical data and does not take into account any taxes or transaction costs that may have been incurred. We cannot predict the future, but if we were to hypothesize and make an informed decision, if we purchased $10,000 today, what would it be worth in 2033? If you invested $10,000 today at the price of $26.76 a share, you would get approximately 360 shares. This would give you $79.20 quarterly in dividends and $316.80 annually. Then if we assume hypothetically the growth rate of 5% per year for the next 10 years, your $10,000 investment could approximately worth $16,384 in 2033, not accounting for any dividends that may have been paid out during that period. If dividends were reinvested, it could potentially grow to $18,456. This calculation takes into account the compounding effect of reinvesting dividends over a 10-year period. Now, if we have a look at the breakdown of the ownership, we can see financial institutions own a huge 71.86% of Bank of America stock combined. We can see 8 of the top 10 institutional investors have been buying, apart from BlackRock and JP Morgan. T. Rowe Price, Norges Bank and Fidelity Management making the big moves. This instills confidence as there is no major sell-off. Now, what do the analysts think the 12-month forecast of the stock price could be? CNN Business have an average 12-month price target of $35.60, which is a 28.3% upside from where we are today. It's based on 22 experts. Tip Ranks have an average price target of $36.09, 30.52% upside from where we are today based on 15. And Zacks have an average price target of $36.81, 36.38% upside from where we are today based on 18 analysts. If we look at the stock price and yield, they have been paying dividends quarterly since 1994. The annualized dividend per share has an increase of 7% since 12 months ago, with the price of the stock down by 30% from a year ago. The dividend yield has an increase of 54%. They pay 22 cents a quarter. The current yield is 3.18%. As of Friday, the 5th of May, it has a market cap of $233.43 billion and a payout ratio of 26.04%. The stock price has had a 52-week high of $38.60 and a low of $26.32. There is a lot of volatility at the moment, so the stock price could easily still drop to new lows. All things considered though, I've been picking up shares monthly. I have an average buy price of $30.59, so looking to average down on this while the price is down. I see this as a long-term play. As usual, it's important to make your own research and consult with a financial advisor before making investment decisions. Thanks for watching. If you've enjoyed the video, please like and subscribe.